All right, my lovely friends, I am back to do this just absolutely lovely post-market wrap-up for today, Monday, September 10th, 2018. So, well, again, if you happen to see the video that I did this morning, I explained to you that there was an eerie quiet in this market. That's pretty much what happened all day. Nothing. The Dow Jones Industrial Average fractionally lower. The broader market, the S&P 500, fractionally higher. NASDAQ, fractionally higher. The dollar did fall under a tiny bit of pressure. Gold and silver are about flat. Bond market, although they did get in there and try to prop this up earlier today, also about flat. Cryptocurrencies did fall under pressure today. So the market literally seems to be waiting for something. Maybe, honestly, this is a setup. You're going to go nuts when I say this, but for a leg higher. It may be doing that. Because, look, that's the mechanism. You understand that. You know, let me just cover this real quick, because what did we just find out? Well, this is how they put it. Are you ready? Consumer credit is once again moving higher. Consumer credit. Well, why don't they say consumer debt? Because it sounds negative. You understand? Now, let me just put a perspective on this real quick. If, in fact, consumer debt, or the amount of debt that consumers are now holding, which every single day we are now hitting a new record high. The American consumer today has never been in more debt in the history of the world than they are right now. So if we're going to use, consumer debt, or how much debt consumers are holding as a measure of our economy, well, then our economy really is as strong as it's ever been, as consumers continue to literally, like I said this morning, sign their own death warrant by borrowing and borrowing and borrowing and then borrowing some more. I mean, we are in the biggest credit/debt bubble. We all know this. In the history of histories, okay? And it's only going to get much worse here because people never learn. And this is just an incredible mechanism to completely destroy themselves. I think, people are generally self-destructive. That's the truth. Very few people have their own interest in mind. That's the truth. I mean, it sounds bizarre, but that's actually, I think, what's going on here on a grand scale. It's credible. It really is. And it's part of the illusion, too. People, they look at their house. Oh, my house is gone up so high in value. Oh, my 401k. Oh, it's doing really good. So I'm going to keep borrowing and borrowing. And then all of a sudden, again, as usual, what happens? The rug gets pulled out whenever that happens. And then the house falls in value. Their 401ks or investments get obliterated. But meanwhile, they're still stuck with all the debt. And then they go, what happened? Oh, I mean, that's really the truth. Anyway, if you were to have a look, and I want you to pay attention to this, because it's never been wrong. Not once since I put it up on my website, traderschoice.net. Front page, bottom of the page is a gauge of market sentiment, whether you should be buying or selling. Well, right now, today, it just took a big leap right into a strong buy. And just like I outlined yesterday in the video, I think this is a setup. I think that the market right now, again, understands that the Fed is going to keep their foot to the floor. Make sure that the 10-year yield remains in the sweet spot. You cannot be in any other asset. So what is that going to do? Exactly. Cash into the stock market. Keeping the illusion real so people out here continue to borrow and then borrow and then borrow and even borrow more than that. Yeah. And again, it's just such a crazy, twisted thing that's going on here. In the history of the United States, we have never seen corporate America get so rich in such a short period of time, where the American people here are now debt slaves to the highest order. And the most incredible part of it is they don't even know it. They don't even know it. And tomorrow, people are going to be in even more debt than they are today, which must mean that our economy is going to be better tomorrow than it is today, right? Because, I mean, you know, if we're using consumer debt here as a measure of as good as it gets, well, our president is absolutely right. But tomorrow, he'll be more right, because consumers will be in more debt. Awesome. See you in the morning.